Hi, welcome to Nia's Perspectives. I'm your girl Nia here, checking in as usual. Today we are talking about credit scores. Like, are you ready? So, I'll tell you a little bit about me. We're going to talk about what is credit, the three major credit bureaus, what a FICO score is, how to improve your score, and how to maintain your score. So, yes, we're going to get down to it. Again, I'm Nia. I am a published author, certified financial education instructor, a public speaker, a single mother, and a human. I'm the founder of Perspectives, which is a company I started in 2017. And I started Perspectives really to help individuals go from struggling and stressed to empowered about their money, so they can reach financial freedom, because everybody has financial goals and you should be able to achieve them. I started it really also to help educate parents so they can know how to introduce different personal finance concepts to their children. And I want to make talking about money normal around the house. I don't want it to be a secret that you can't talk about money. Okay. So I started the BASE program because you can't teach your children about money unless you yourself know about money. So I started the BASE program. It launches July 1st, 2020, and it's basically different courses that I'll post and create based on different personal finance concepts. All right? Very simple. So let's get back on topic. Enough about me. I don't want to talk about myself all day. So what is credit? Credit is... It's something that's been around for a long time. People have used it in different forms, one way or another. It's basically when you receive something, usually of value, and then you promise to pay back for it later. So you'll pay them back later. So they extend something to you now, and then you'll pay for it later. And it's important because credit is used in the screening process for many companies. Buying a house, buying a car, renting a car, insurance, when you get auto insurance quotes, job hiring process. I mean, basically many of the most important things that we do in life, credit can affect it. So it's important for you to keep up with yours and know how to maintain it, because it'll affect you. Having good credit can be the difference in the interest rates you pay when you go purchase a car. Somebody who has a higher credit score can go purchase the same exact car that you purchased, but they'll end up paying much less than you pay, even though you purchased the same exact car, the same exact mileage, the same exact day. But you know what that means for you? That means that you have to pay more while they pay less. This means that they'll be able to have more money. This gap in between you and them is money that they have to save, to invest, and to do a lot more things with. And that means that's keeping you back. So that's an important reason to get your credit together. It's the foundation of our livelihood, if you really think about it, because where you live and where you work can be based on your credit. Like if you want to work at a bank, banks definitely run your credit. And if your credit is not good, I've been denied an application for a bank like years ago. And that was the reason, because they said my credit wasn't high. And the reason why they do that is because you're working with money. So they feel like if you're in a huge amount of debt, then you're going to be more likely to steal or do something unorthodox because you are in a bind and you owe a lot of people. It's just their thinking. I didn't do it. But these are the reasons why it's so important and how it affects you. So when you know what to do to affect your credit, you move differently. When you know better, you do better. And companies look to your credit to determine the likelihood that you will pay them back. They basically look at your profile, and if your profile is considered high risk, this will discourage them from extending you credit. You have unsecured credit, and then you have secured credit. Unsecured, secured. So unsecured credit means that you have to get the credit, they extend it to you, but you don't have to do anything or show any upfront collateral. That you fill out the application, they will evaluate your circumstance. They look at your past credit, your income, and your current debt and things like that. But you won't have to say, okay, well, I'm going to give you this. When you have a secured credit card, a lot of times you have to give a deposit, and then that deposit is usually what your credit is. So if you have to submit a $500 deposit, then your credit available is that $500. And you basically have to earn your way for them to extend you credit. Similar to a title loan, you have to present your title. So if you default on that loan, then they're going to take your car. So that's secured credit because you're securing it with some form of collateral before they extend you credit. So there are three main credit bureaus: TransUnion, Equifax, and Experian. These three credit bureaus are the major ones. They gather your information and creditors report your information to them monthly. And they update them on the status of your account every month. So if you're behind, they'll let the credit bureaus know if you're ahead. And the credit bureaus, they suck up all of your information. They record everything. Every time you apply for anything, whether you get denied or approved, they're going to record your phone number, your address that you use, all of that information. And then all of that stuff is collected in your file. So if you have disputes or things like that, you can either go to their website to dispute it, or you can write a letter and mail it directly to them. Whatever you do, though, I'm not here to encourage you to just dispute everything. But it's important for you to check them all. Check them all, make sure the information is accurate. Make sure that it's accurate across the board. So you have to check all three of them. You can't check one and then don't check the others because the others might have that same inaccurate information. Different creditors report to different credit bureaus. So all of the credit bureaus won't have the exact same information. So that's why it's important to check all three of them. And what your credit score is, it's really called a FICO score. And it's called a FICO score, and a lot of times people confuse it with the Vantage score. And now the Vantage score is the score that you get with Credit Sesame or Credit Karma and many of those different companies like that. It's two different types of credit scores. And they're actually, they pick the score completely different. So that's why you'll see people say, oh, well, Credit Karma said that my score was this, but when I checked it, it was this. Because Vantage scores and FICO scores, they measure your credit completely different. But when it comes to you getting a loan and when you come to getting a mortgage, a car and things like that, they're going to use your FICO score. They are not going to use your Vantage score. Both of the scores use a similar credit range from 300 to 850. Of course, the higher number indicates that you're more responsible with your credit. The most recent FICO version is version 9, and that was as of February 2020. But 8 is used a lot more often, from what my research. And then you should also know that when it comes to like loans, credit cards, and mortgage, they actually use specific scores for them. They use separate scores. The Vantage score is calculated differently. So I'm going to tell you how the FICO score is calculated because that's the more important one and that's the one you should go by. It'll be more accurate to what the lenders and the people who you are trying to get credit with will look at. So it's 35% by your payment history. It's 30% the level and the amounts of debt, 15% the age and length of credit history, 10% the types of credit, which is basically your credit mix, and then it's 10% your credit inquiry. So those are the 5 aspects that make up your credit score and what they use. And it's important to see 35% is payment history. So the biggest thing that affects your credit report is your payment history. The second biggest thing is the amount of money you owe. So this right here tells you how to move when it comes to managing your credit. So we'll talk a lot more about that later. As I said, Credit Sesame and Credit Karma and sites like that, they use the Vantage score, and it's not the score that potential lenders will use, but I still feel like they are very good because the way that your score moves on Credit Karma or Credit Sesame, it shows you how your actions affect your credit, and that's important. So how do you improve your score? You can correct it by correcting any type of disputes you have on there. Make sure you negotiate any debt that you have that you're trying to resolve. Have a good mix of credit. You can't just have 2 credit cards. Maybe try a loan or things like that. Self-lender is a good loan that will help you. You pretty much loaning to yourself, and then at the end you pay the money back to yourself. You can get a secured credit card, limit applying new inquiries, and then you want to keep your credit utilization down. Bring that credit utilization down to under 30%, and that will help you improve your score fast. Reason why is because it shows that you're using your credit responsibly. You have $5,000, but that doesn't mean you have to go use that $5,000. You're only supposed to use under 30%. So as an example, if I have a $1,000 credit limit, I'm not going to spend more than $300 because that shows them that even though I know I can spend $1,000, I don't spend $1,000. So that's important. And that's the type of things they look at. Okay. And finally, to maintain that score. So once you build that score up and you get your score to where you want it to be, you still need to move a certain way to maintain it. So to maintain it, I would say get a credit monitoring service so that you can know anything that gets applied to your credit report. They will notify you of any new credit. They will notify you when your credit score changes, if any new accounts, if any adjustments to your accounts. Like if your one time I learned that my available balance got increased from my credit monitoring service and not from the actual credit card company. So that's really good for things like that. And the higher balance will help your utilization. If you don't plan on applying for new credit in a very long time, you have everything you need, consider freezing your reports because that will make sure no one can use your credit. Keep your utilization low, as we discussed. Minimize new debts. If you're looking to apply for a credit card, try the pre-approval. See if they have a pre-approval link first, because a pre-approval link usually doesn't do a hard inquiry. And lastly, the difference between the hard inquiries is a soft inquiry will not hit your credit and affect your credit, but a hard inquiry will. It will hit your credit and it will affect your score. If you get a lot of hard inquiries, your score will go down. Then pay your balance in full on your credit cards every month to maintain your score. And finally, get to it. So yes, that has been it. We've talked about how you can improve your credit score, maintain it, and if you needed to, how to build it fast. So that's all for today. I just wanted to come and do a quick video. If you like this, if you have not been here before and this is your first time, please make sure that you subscribe. Thank you.